Namaskaram, ladies and gentlemen. This is C.S. Sudarshan. I hope you are killing it in your studies. So, audit, it's like a last minute revision that I'm doing now, and it is for those students who are very weak at some core areas in auditing. So in this, I'm not gonna focus too much on word by word, line by line, nothing like that. Some areas in each chapters. From each chapters, I've picked certain areas where students lack proper conceptual understanding. And I'm just focusing on that, just like the basics of auditing. So why I tell this is important is because without understanding this, if you go to, or by misunderstanding this, if you go to exam hall, in case studies, in MCQs, everywhere, if this comes in, you will not understand what it is properly. Sometimes what is the difference between substantive analytical procedure and a test of details? You know that, you have studied that, the definition, everything you know, but in your mother tongue, can you explain what is it? Like 90% or 80% of the students can do that, but there are 20% students who may not be able to do that. So this lecture is like focusing on all these core areas. And I'll keep it below 2 hours, 1.5 hours, 1 hour or something, so that I know exam is happening tomorrow. Don't rely on marathon, something like day before examination. In auditing, the game is purely on self-study. So that is why I'm not taking like a 10-hour or marathon, which is not needed. If it was 1 month back, then it would be fine. But now it is not that much needed. So first, it is nature, objective, first chapter, nature, objective and scope of auditing. What I'm gonna do is that first is independence of mind and independence of appearance. In this chapter, independence is the core area. Independence. So first is independence of mind plus independence of appearance. So what do you mean by independence of mind? I'm speaking a bit faster because obviously this happens. This is a marathon, right? So not a marathon, last minute revision. So what is independence? Independence means you as an auditor should be independent of your mind and independent of your appearance. Independent of mind means you should be able to think independently. Simple as that. Think independently. What do you mean by think independently? Think independently means, if you imagine you are auditor and you are the friend of management, your management is your brother. Someone from the management is your brother. So what will happen? You will not even if you notice an error, you will not report it, right? Because he is your friend. So that is why it is said you should be independent of your mind. You should not be connected with anything, any of them. So first is that. Then independence of appearance. Independence of appearance means the public, when people are looking at you, you should be independent of the company. You should be independent of mind plus independence of appearance. That means imagine you are posting a lot of pictures, like going with the trips, going with family functions, all these things with the company's manager, and you are auditing that company. Will people believe you? No. So you should also look independent of the public. That is independence of mind plus independence of appearance. Then next, this you may know, right? In a company, the process of auditing, everyone knows, but still I'm saying, shareholders are the ones top, and they will appoint the auditor. And below shareholders, there are management. This management are the people who runs the company. So shareholders appoint the auditors to check whether whatever management is doing is correct or not. So management prepare the financial statements and give it to the auditor. Auditor will check it and give it back to the shareholders, management, everyone. Okay. That is a process. Then audit evidence should be sufficient and appropriate. That is, you know that I don't want to explain that too much. Then first chapter is done. Then the second chapter, audit strategy, planning and program. Audit strategy, planning and program. What does mean by audit strategy, audit program, audit planning? Tell me. What is the difference? You may know the definitions, you may know what to write, but do you know the meaning of all these things? Yes, that is what I'm asking. So first is audit strategy, audit planning and audit program. This three comes under the entire planning process of auditing. Entire process, this three is there. Audit strategy is there, audit plan is there, audit program is there. So imagine you are going for a cricket match, not you, India versus Sri Lanka is happening. India versus Sri Lanka cricket match is happening. So tomorrow is the match. So today, coach, the Indian team coach, Virat Kohli, the captain, whoever it is, both of them will sit in a room and will make a game plan, right? A complete game plan about how tomorrow's match should be. That is a game plan will be like tomorrow the pitch, sometimes rain may come, or sometimes so the pitch is good for batting, the pitch is good for bowling. All these things they will decide. The game plan. The entire game plan. So that is what we call audit strategy. Similarly, in auditing, we need audit strategy. Then audit plan. Audit plan means the next thing. So tomorrow morning in the where the dressing area of cricket team, every players will be there. So there they will decide on the next level, next step. Next step means if we get batting, who will bat? Game plan, we decided we need batting first. That is game plan. That is audit strategy. Here, audit plan, if we get to the batting, if we get to the toss, who will bat? Like Rohit Sharma in the first, then Virat Kohli in the second. All these things will, that is what we call audit plan. In auditing also, the next step is audit plan. And the third thing is audit program. Okay. Next is more detailed. Okay. Rohit Sharma is going to bat now. We have decided we need batting, an audit strategy. Then audit plan. Okay, who is going to bat first? Who is going to bat second? Rohit Sharma is there. Now Rohit Sharma is going to the pitch. Now, how should he hit? That is in audit program. Specific detailed instructions will be given. That is first 3 overs you need to hit attack. Then if one wicket is gone, if the other person is out, then Rohit Sharma need to play slow. This is what we call audit program, detailed step. So audit strategy, an entire game plan, audit plan, even more detailed. Audit program, the specific details, specific minute details, etc. will be given. So in auditing, how it works. For example, we'll take the case of Ola, the scooter company or Ola cabs, whatever it is you take. In Ola, I'm speaking fast. You put it 0.75 because this is last minute and you only have like 30 hours or something for your exam. I don't want to waste your time. And please don't watch any marathon something on this day. Self-study is what matters in auditing. So listen to this, get your concepts cleared, go and study. That's it. I'm focusing only on the basics of auditing. So next is Ola, how we are going to audit. In the case of Ola, first the auditor will decide, okay, we need to focus on revenue recognition, how Ola is recognizing the revenue, how Ola is making payment to the drivers, all these things. That is the game plan. These are the areas we need to focus. Auditor will decide. That is an audit strategy. Next is, okay, how to verify the revenue. We decided we need to check the revenue. Then how to verify the revenue. How to do the verification, like in a, that is what we call audit plan. Then next, audit program. How to verify the revenue also we decided, like with the three people going in and verifying the revenue. Okay, that is audit plan. The next is audit program. We'll make a set of instructions and give it to the people checking it. How to verify the revenue, how to detailedly check. That is, check it with the invoices, ask the department heads, all these things. Detailed verification procedure, step by step is audit program. Then like this. Then next is audit procedures. These are another important area. Now mostly 1 and 2, first and second chapters, important areas are like covered. Then audit procedure comes in third, fourth, everywhere. So this is a base area. You may have studied risk assessment procedure, further audit procedure, everything. What is risk assessment procedure? What is further audit procedure? Don't give me the definition. Tell me what it is in your mother tongue or in language, whatever it is. Have you understood that? 90% may have understood, 10% will not be the understood. But if you know all these things, just forgive me, I'm speaking it for others also. There may be something that you may not know. So just get the conceptual clarity done. So next is risk assessment procedure, further audit procedure. Imagine, I'll give you one example, you will understand everything. I am the auditor of boat earphone company. I'm going there, I'm going to audit. So today, I went to boat for auditing. So first, I will not do the audit. What I will do is that I will spend 1 or 2 days, I'll just sit there, I'll see what are the areas where risk is there. That is what we call risk assessment procedure. And what do you mean by risk? Risk means areas where there is a chance of fraud or error. Imagine a boat company has a purchase department and has a sales department. Sales department has 10 heads or 10 employees and purchase department has only 3 employees. But the purchase is anyways, the purchase will be almost equivalent to sales, the number of transactions. So what does that mean? So that means there is a chance of error in purchase because only 3 employees are handling lot of works. So there is a chance of error, right? So purchase is a risky area, you need to check purchase area more. That is what we call risk. Auditor will spend 1 or 2 days verifying, identifying all this risk. For example, in auditor uses 3 ways to identify this risk. Enquiry, observation, analytical procedure, mostly. Enquiry means first 2 days, he'll just simply sit there. He'll talk with the employees. He'll talk with the management people. Then inquiry is happening. He'll talk. Okay, where is your boat's earphone? The stock kept. Stock is kept. They'll say about the place. Now auditor will ask, is there a internal control for that? CCTV, anything is kept? They'll say, if no, okay, then what does that mean? That area, in the case where the area where the stock is kept, CCTV or no other internal control is there, so the employees may, he can easily do the fraud. So you need to do more verification in stock area. So he'll spend 1 or 2 days like this. He will analyze all these things, all the risky areas, where the areas where there is a chance of fraud or error. That is what we call a risk assessment procedure. And he uses basically 3-4 procedures for this. First is inquiry, by talking to people. Next is observation. He went to check the entire company. There he noticed the stock was kept, but CCTV was not there. So, or any other internal control. Internal control means something that is kept by the company to prevent any fraud or error. Just understand like this, base understanding. Example, CCTV. So this CCTV is not there. I observed that. So that area need to be checked more. Inquiry, observation, and analytical procedure. I'll explain analytical procedure in detail in SA 520, but for your understanding, just understand it like this. Analytical procedure just means comparison. It is just comparison. Comparing last year's financial statements with this year's financial statement. Last year sales with this year's sales. Last year it was 10 lakh, now it was 12 lakh. So what do you understand? 2 lakh sales is increased. 20% sale is increased. That is what we call analytical procedure. Comparing anything and arriving at a conclusion. Imagine some of your parents, not everyone, some of your parents may compare you with some of your friends. Say that you with your friend and say that he studies 10 hours, you only studies 8 hours. So the chance of you passing is less. Comparing two things and getting a result. That is analytical procedure. So comparing just you had coffee from Starbucks, you had coffee from Cafe Coffee Day, and you come to a conclusion that Cafe Coffee Day coffee is better. This is analytical procedure, comparing financial statements, cash flow statements, comparing anything in auditing. Then risk assessment procedure means we will first, before starting auditing, entire audit procedures, all the things we do in auditing is what we call audit procedure. Steps auditor takes to do the auditing. Entire audit procedure is divided into two. Risk assessment procedure and further audit procedure. In risk assessment procedure, that is SA 315. In this, auditor will identify the risky areas in auditing. He'll spend 1 or 2 or 3 days doing this. And once he identifies these risky areas, he will now how he will respond to this. That is what we call further audit procedure. Auditor identified the risk. How is he going to respond to that risk? That is what we call further audit procedure. SA 315, SA 330. Further audit procedure. Auditor's response to assess the risk. He will assess the risk here, identify the risk. He will assess whether it is a high risk or a low risk. Then here is how he will respond. That means you identified CCTV is not there in as an internal control in stock where the warehouse it is kept. So SA 315 risk identification assessment is done. Now how will you respond to that? You will check your stock more detail. You will do test of details. You will check it more deeply. You will see whether if there are any other internal controls kept. What are the things you will do to respond to that risk is further audit procedure. So further audit procedure is divided into two. That is, first is test of controls. Test of controls, TOC. Test of controls means the stock, imagine CCTV is there, but you will go and check the CCTV in detail. Sometimes it may be functioning bad. You are testing the control, you are checking the control. That is test of control. Then another one is substantive procedure. Substantive procedure means basically significant detailed procedures. It is divided into two. Test of details. Test of details means doing the detailed checking. For example, I told you about the purchase department case, right? Purchase department, only 3 employees are there, that thing. And sales more, so chance of fraud in purchase is more. So you will check the purchases deeply. You will vouch everything, you will verify everything. That detailed checking, detailed response to that risk is what we call test of details. Detailed checking. Then substantive analytical procedure means it's a form of analytical procedure where you will compare two things and do detailed checking, detailed comparison. Just keep it in your mind like that. Here you will use analytical procedure in risk assessment procedure, you will use analytical procedure. But that is just basic thing, but here you will substantive analytical procedure, significant analytical procedures you will do, significant comparison, all these things. Okay, so I'll just give you an understanding. Just look at this. Audit procedure is divided into two. Audit procedure is divided into two. First is analytical procedure. Audit procedure is divided into two. First is risk assessment procedure, then further audit procedure. This is 315, then this is 330. Essay. Then in further audit procedure, you will respond to the risk through testing the control first. Then substantive procedures are also there, detailed checking, and that is what we call test of details. Detailed checking through vouching and verification. Then there is substantive analytical procedure. Two things. Hope you understood the structure. I know I'm going a bit fast. Either you take a pause now and think back, or you put it at 0.75 or something. But normal in regular classes, I don't teach this fast. Normally we'll go slow. And talking also is very slow normally. Then normally, like in classes, not in public. So next is other things, risk assessment, and in our next chapter. Basically, this also comes in 3 and 4 all chapters. Then next is class of just before that, is there anyone who don't know what do you mean by assertion? What is an assertion? Tell me. I'm just focusing on the basics. What is an assertion? What is an assertion? Assertion means everybody will know it, but 10% may not know. I'm saying for the 10. Assertion means on the P&L balance sheet everywhere, amounts are there, right? Land and building 10 lakh, plant and machinery 10 lakh, sales 10 lakh, all these figures will be there, right? So what is actually those things? Management is preparing the financial statements. Management is writing all these things to us. Management is talking to us through the financial statements, saying to us that the company had 10 lakh sales in the last year. In this year 24-25, company had 10 lakh sales. Management is saying to us through financial statements, right? That is what we call assertion. What you understand from every item in the financial statements. Land and building 10 lakh. That is an assertion. What do you understand from that? The company has the land and building, and the balance of that land and building at the end of this year is 10 lakh, whatever it is. Or this is what we call assertion. Okay. Then class of transaction. Everybody knows this, but what is class of transaction? Just means group of transactions. Cash sales, credit sales, all these things are there. All this will be grouped under sales. That is what we call class of transaction. Then rent, repair, all these expenses are there. That comes under expenses, class of expenses, group. The next is what we call account balances. What do you mean by account balance? Everyone knows that. What are the balance in each of the accounts? For example, land and building 10 lakh. Ledger balance 10 lakh. That is carried forward to balance sheet, right? Then disclosures as per applicable financial reporting framework. Then next is audit risk. What do you mean by audit risk? Audit risk means risk that the auditor gives an inappropriate audit opinion when the financial statements are materially misstated. That means management prepared financial statements and gave to the auditor for checking. Imagine that had a lot of error or fraud or something. Some errors are there, but the auditor checked everything and said everything is perfect. That is what we call audit risk. Sometimes he may have not noticed that. Whatever the reason it is, that is what we call audit risk. Then audit risk, there are two types of audit risk. One that exists at the financial statement level, other audit risk that exists at the assertion level. Assertion means each of the small items. For example, I'll say the rent expense of 10 lakhs, not 10 lakhs, take it 10,000. 10,000 was a rent. So the accountant, when entering the rent, he mistakenly put it in the other head called repair. Only the head changed. This amount rent 10,000 went to repair 10,000. Will it affect the entire financial statements? No, right? Amount anyways, the P&L left side need 10,000. That 10,000 is there itself. Only the head changed. It affected only one assertion. This is what we call risk that affects specific assertions. Then risk that affect the overall financial statements. That means imagine sales of 20 lakhs. For the accountant forgo to add sales of 20 lakhs. What will happen? Sales figure will change. So obviously the gross profit figure will change. Net profit figure will change. And net profit, like it is carried to the retained earnings, all there. The balance sheet also. Balance sheet also will change. So one mistake affected everywhere. That is what we call entire audit risk at the entire financial statement. Risk means this kind of fraud is there. Auditor unable to detect that, or auditor after detecting that said the financial statements are okay. That is what we call audit risk. There is a mistake in the financial statement, but auditor gave a clean audit opinion. So then audit risk happens at two areas. Audit risk at assertion level is divided into two: inherent risk, control risk. There is something called detection risk. That is completely different. That detection risk means auditor unable to detect the fraud or error. That is detection risk. That is not included in this. This assertion audit risk at assertion level is inherent risk, control risk. Inherent risk means whatever you do, a risk will be there. A fraud or error, something will be there. That is what we call inherent risk. Even before you do the auditing, when financial statements is given to you, it is assumed that some error or fraud may be there in the financial statements because of the nature of the business. That is what we call inherent risk. Inherent risk, just keep in your mind like this: whatever you do, still there is a risk of fraud or error in the financial statements. Then control risk means the controls are not working effectively. Even though the company has a lot of control to prevent or detect a fraud, there is a risk that these controls don't work properly. Company put a CCTV to check whether this employees are working properly or not. But there is a risk that CCTV may be hacked by one employee, or CCTV may not be working. That is what we call control risk. Then, hope you understood, right? Then we have automated environment, controls in an automated environment. Automated environment means, for your understanding, base level understanding, not related to auditing, I'll say. An environment in which everything is automated. Basically, everything is automated. Automated means manual intervention is not needed. For example, I'll say one thing. Imagine now companies are giving this 10-minute delivery, all this Zepto, Blinkit, Swiggy, like Instamart, all these things. So how is this possible? I don't know whether they're doing it like this, like what I'm saying, but imagine a scenario in China or somewhere. I've seen China or US, wherever I've seen YouTube videos of a warehouse where if an order comes, you placed 10 packets of milk, 3 packets of Maggi noodles on Zepto. What happens is that the moment the order reaches there, immediately like a warehouse belt is running. So immediately some machines or something will put the order, everything, put it in a packet, come to the delivery area where the delivery we can pick and deliver it. So automated, entire thing is automated, automatic, everything is automatic. That is what we call automated environment, for your understanding. So in auditing, you are going to audit such kind of a company where a lot of automation is there. So you need to learn about automation, right? Simple, just base level understanding, keep it like this. Then controls in an automated environment, general IT controls and application controls are there. Two types of controls are there. Yeah. So the broad policy and procedure that apply to the entire IT environment of an organization. Entire IT environment is what? The policies or procedures that affects to the entire IT environment. IT company may have many different IT environments. So affecting all this, a policy covering all this is what we call general IT controls. Controls like internal control. Then application control that are specific for certain applications. Controls that are specific to certain softwares that company uses, all these things. Okay. Then I don't want to take too much time on this area. So this third chapter, risk assessment, internal control. Then there is something else which I need to explain. Where is that? Yeah. Which chapter is this? The first chapter. Yeah, risk assessment, internal control. The audit risk we explained. Then the next concept is SA 315 I explained earlier. There comes, I told you, it comes under this chapter. Then where is materiality? Yeah, materiality. SA 320. Oh no, sorry. 1 second. This is chapter number 3. Yeah. Where is it? Materiality. What do you mean by materiality? SA 320. Materiality simply means, I'm just focusing on the basics. Materiality means significance, importance. Imagine you are an auditor. you are going to check in the P&L rent or like the expense area, lot of different, it's a big company like Reliance or something, lot of expense items, heads, everything will be there. So how will you identify? So there may be some small frauds, small errors, big frauds, big errors, everything will be there. So as an auditor, how will you identify what is, like some small errors, everything, just leave it. Some 10 rupee, 2 rupee error, everything, just leave it. You need a bigger errors like 2,000, 5,000, 10,000 rupees errors, right? Small errors, why do you want to focus on that, right? No. So auditor will keep a level. Just imagine, I'm giving you base level understanding. We'll say, imagine 5,000 rupees. 5,000 rupees. So all the errors, we'll only check things that are above 5,000 rupees. All the errors or frauds that are below 5,000 rupees, we'll just leave it. Errors mostly, not frauds. Frauds anywhere it is important. So we'll leave that. So that is what we call a materiality level. We'll keep a level. All the things above that only we'll check. Below that, it's not below that. Even if there is a 1,000 rupee error or something, just leave it. That is what we call materiality. A level we'll keep. And I told you 5,000, right? And where do company make, from air they cannot come up with an amount, right? So they'll say 10% of, or like 1% of the sales amount, or 1% of the profit. Imagine the profit is 2 lakh rupees or 1 lakh rupees. 1% comes to 1,000 rupees. So all the errors below 1,000, that is 1,000 is a materiality. All the things below 1,000 ignore. Above 1,000 we'll say. I'll just write it and show it to you. So you'll get the clarity. Imagine like a chart. Just think of it like a chart, where or not chart. Don't even need chart. Just think like this. Just one line. So they'll say, put one line like here. This is imagine 2,000 rupees. That is not 2,000. They'll say, imagine 10% of profit. Imagine the profit is 1 lakh. So 10% means 10,000. So this is 10,000. A level below which all the things we'll ignore, above which we'll check. That is what we call materiality. And this 10% of profit, or they'll say 1% of sales, or like 2% of assets, something like that. That is, we don't focus too much on that, because that is auditor's professional judgment. His judgment, he'll do that. He can do it from his judgment. So this is what we call benchmark. This sales, this profit, or like I told, 2% of assets, they'll say, this is what we call benchmark. That is a base. A base. Sales and profit is a base. So 10% of sales is what we keep it as materiality level. That is what we call benchmark. Okay. Materiality understood. Materiality means a level that is kept, like 2,000 rupees, 5,000 rupees, amount they'll keep. All the errors or fraud below that, like ignore, like, leave it. And above that, we'll check. Okay. Mostly. Then understand this. Sometimes then there is something else called performance materiality. Materiality I told you. Imagine 10,000 is the materiality. Then we'll put, sometimes auditor will say 10,000 is like a bit high. There may be someone doing the fraud of 9,000, 8,000 is also important, right? So let me put another thing called like 7,000. 10,000 is there. He'll put some figure called 7,000. Just below that, materiality level is there. A level that is below the materiality level. That is what we call performance materiality. That is, this level he'll keep. And all the frauds below like 10,000 and 7,000, between this also auditor will check. All the errors, everything. Below 7,000, completely ignore. Just like that. So he'll say, imagine, just keep it like this. This is auditor's professional judgment, so don't overthink on this. This is the level. So auditor said, auditor took the benchmark. Auditor took the benchmark as sales, and the sales is 1 lakh. So auditor took the materiality as say 1%, 1% or not 1%, 10%. So 10,000. So materiality came to 10,000. All the amounts above 10,000 we'll focus more. Then auditor put the, now you understood what is benchmark, 10% of benchmark. Okay. Now auditor will put the performance materiality, that is equal to like 7%, 7% of this. So it is like 7,000. Oh, sorry, 7,000. This is what, all the things below this completely ignore. All the fraud, error, everything. Not fraud, mostly they will check, because sometimes they'll do small like 10 rupee fraud also they'll do. So fraud, like mostly errors, this area, and all the things in between also we'll check. But above this, Super important. Just like that. Understand it. Okay. This is what we call materiality, performance materiality, and benchmark. Just for your understanding, just keep it like this in your mind. Okay. Materiality, everything is done. So this is one area. I am not focusing too much. What is this? That's like mnemonics, putting line by line, everything you understand. Internal control, I told you already what it is. Internal control is. Internal control just means something the company has put to protect or prevent without from a fraud or something happening. Just checking everything. Example, for if 10 employees are there in the purchase department, one supervisor will be kept above him, above all these employees, to supervise everything, to check whether they are performing properly. That is, a supervisor is an internal control. Sometimes lock and key. You are locking something, you have valuable documents in your company, you lock it in a safe, right? That is internal control. All these are internal control. Okay. Then say 501, 500, everything that you understood everything, right? That is like easy, automated enrollment we covered. Then data analytics, and not like an important area. Audit procedures, I told this comes under the further audit procedure. Test of controls, substantive procedures, test of details, substantive, all these things. This here is substantive analytical procedure. Sorry, some mistake is there. This is old textbook, not the new. New version we have changed. This is what I gave for the change. New version is available. If someone want to buy it, you can buy it. But now you don't need it. Hopefully you will clear it in this attempt itself. Yeah. Next we will go on to the next chapter. But in 4 there is nothing that can. This 1, 2, 3 and 4 are the core areas. Other chapters, chapter number 5, financial statement, no bigger concept. 6, audit documentation, you know. 7 and 8 also. This is the core area where students don't know. Audit report is very easy for you. There is nothing misunderstanding there. I don't want to waste your time. All those chapters you can easily read and understand. Different entity, all these areas. So this 3, 4 chapters is, third chapter is what I felt will be technically tougher for you, right? Now we will touch upon sampling. Sampling, say 530, it's not, it's actually an easy essay, but because of the language used in the essay material, you may feel it a bit tough. Some students may not even understand this properly. So I just thought of giving it a go. So sampling, everyone knows, selecting, because there are 1,000 bills, 1,000 sales bills you have to check. But you cannot practically check 1,000 or 10,000 sales bills, right? So from that you will pick some sample, like 10, 15 samples, and you will check it. And okay, if that 10 is okay, then you conclude that the other 10 bills are also fine. Other 1,000 bills are also fine, right? That is what we call audit sampling. Imagine you know it, right? So that is audit sampling. Application of audit procedures to less than 100% items in a population, such that all sampling units have equal chance of selection. Therefore, don't focusing too much. Then approaches to sampling. Sampling has basically 2 approaches. What are the approaches to sampling? The first approach is statistical sampling and the second is non-statistical sampling. What do you mean by statistical sampling? Using 10,000 bills are there. You have 2 options. Either you can just go and, because anyways you cannot check 10,000 bills. So what you will do, you will pick like 50 bills. So randomly you can just go and pick 50 bills. No technique, nothing is actually being used. But when you are doing it randomly also, using some techniques, you are picking it randomly, but you are using some techniques to do that. If you are using any small techniques, some procedures or techniques to pick these samples, that comes under statistical sampling. And non-statistical sampling means no techniques, nothing is there, you are simply picking it up. I'll tell you what it is. Statistical sampling means it's a random selection of sampling units, but probability theory is used. I'll explain what it is. Sample chosen by applying certain statistical and mathematical methods, like Excel formula or some random number table, something like that. In Excel, you will put, imagine the bills will be physical or bills will be in Excel. 10,000 bills are there. You cannot check everything. So like this, the invoice number will be here. Invoice number, I think I have the Excel. Let me see. It's basically like this. Just look at here. I'll just show it to you. And you all know Excel, right? Invoice number like 1, 2, 3,000 bills will be here. Then the party's name will be here. Then here you will have the amount of the bills, like each 1,000, 2,000, some amounts will be here. But here you will put a formula. In Excel you can put formulas. Here you will put a random formula, that is, for example, RAND, 1 bracket and close bracket. If you put this formula, one random number will come there. some random number will come there. So here also you will put RIND, 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 RIND. So you will get many random numbers, and from those random numbers you will pick the things randomly. Here you are putting this RIND, random numbers. So that is what we call random statistical sampling. Using any Excel formula, or just don't overthink, complicate here. It's not actually coming for exam like calculation or anything. Just for understanding, I'm saying this, don't think of it. If you are using any formula or Excel or random number table, anything, that is what we call statistical sampling. For selecting sampling, if you are using that. And non-statistical sampling means you are not using any methods, simply picking it randomly. That is non-statistical sampling. A sampling approach that does not have any of these features is non-statistical sampling. Here the sample size and composition determined based on the personal experience of the auditor. Auditor will determine everything, judgment. Here you are using some techniques. Okay. Then we have stratification and weighted value selection. What do you mean by stratification and weighted value selection? Stratification means dividing an entire population into discrete subpopulation. Wait, I'll give you subpopulation which have identifying characteristics. Wait, I'll make you understand. Subpopulation is what we call stratum. Just look at this example, you will understand. You had 10 bills. Imagine 10, it's not 10, for only I can write 10 only in the PDF, right? So imagine you have 10,000 bills. Instead of this 10, it is 10,000 bills are there. So and you have to pick 50 samples from that. Similarly here, it is 10 bills are there and you have to pick 2, 3, 4 samples something. So you will divide this entire thing into different strata, into different groups. So here, look, if you look at the amount, it is like 1,100, 300, 200. So around from the range of 100 to 2,000 something range is there. So we will make different subpopulation. That is 0 to 500. What are the invoice amounts? 0 to 500 means all the amounts, bills with the amounts in this range will come here. 500 to 1,000 will put it here. Invoice 5, 10, 6. Like this way, we'll divide the big population into different groups. So now all these groups have identifying characteristics. That is, these bills are of almost similar amounts, right? These are also similar amount. These are also like not similar in that 500 rupee gap. Now we will pick one sample from each. Tuck, tuck, tuck. Now we will have a representation. This is what we call stratification, dividing the population into different subgroups of similarity. Subgroups we are dividing it and picking sample from each group. So normally, if it was you are not using any of these techniques, how will you pick sample? 10 bills are there. You will just randomly pick one or like for example invoice 4 and invoice 6. I picked. I can randomly pick, but I need 3 samples, so I picked invoice 9 also. So what is it? From this sample, it is 1,300, 800, and 900. So this is one way, but here you are dividing it into different groups. So when you are picking it like from here, you will get one sample from the smaller group, one from the middle group, and one from the bigger group also. It's a better. So it is better compared when you get when the sample should be representative of the entire population, right? So this is actually better. Just understand this. This is one method you can do it. Stratification, dividing the population into different stratas, and this subpopulation is what we call stratum. This subpopulation. This is what we call stratum. And the numbers, the bills inside, this is what we call strata. Hope you got it. Then value weighted selection. Value weighted selection means selecting items based on value. Look at this example, you understand. Just look at here only. This is what you got. There are many debtors are there. Debtors. Ram, Rahul, Suma, all these things. And Ram owes 10 lakh rupees, 1.8 lakh rupee, 2 lakh rupee, 13 lakh rupee, all these things are there. So the total is 60 lakh rupees. 7 debtors our company has. So you have to pick a sample from like 2 or 3 sample from this. But if you closely observe, in this 60 lakhs, here Arjun, Arun, Ravi, Saju and Ram are the major guys. These guys owe around like 80, other guys are only owing 1.8 lakh, 2 lakh, like 80,000, all these things. But these 4 people are owing bigger money. So actually in the 60 lakhs, around 90% is these 4 people. So when you are picking a sample, that 4 people, it's better to pick from that 4 people, right? Because they are more. So that is then what we'll do is we'll in an ascending order or something, when you arrange like this, that is not either for sampling. Here these 4 people are giving 56 lakh in the 60 lakhs. So you'll you'll group them based on value. Group them based on value. That is 18 lakh, 15 lakh, 30, the amount. You'll group the debtors based on amount, value, and pick the weighted values. Guys having more weights. These guys are having more weights, right? Weights means the amount, the ratio, proportion. In 60 lakhs, 56 lakhs is owed by these 4 guys. So you'll group them first and pick sample from them, because they are actually the bigger guys in the that entire debtors. Value weighted selection. That is selecting the sample based on weight of value. You group them like this and select sample from them. That's it. Here you are grouping based on value, amount, and here you are grouping based on different characteristics, something like that. Okay. Stratification and value weighted selection. Hope you got it. The same things are there. Then in this chapter, I don't think there is nothing else that you need understanding. So let me, external confirmation, segment 501, 500, audit evidence, everything. Because I am focusing only on areas that are complex. It's sometimes areas where it's difficult for you to understand by yourself, or some things which you have been misunderstood, which you may have misunderstood. And then next is chapter 5, financial statements, nothing to be misunderstood, nothing complex. Just read, you will understand. Chapter 6, audit documentation, very easy, nothing complex. Then 7 also, nothing is that kind of a sort is there. Everything is easy. Subsequent events occurring after the date of financial statements. That is what we call subsequent events. And if you want, I'll just explain. All the other things are very easy in 7. Written representations. Well, just you understand everything. Like subsequent events, just thing. Subsequent events means events occurring between the date of financial statements plus facts that become known to the auditor after the date of audit report and before the date of issue of financial statements and after the issue of financial statements. This is, you can easily understand this if you sit and read properly. There is nothing more. If you want to take a screenshot, just this timeline. This is what I used to explain in class. Then there is nothing. Then subsequent events, other like normal things are there. Then going concern, you know that, right? Nothing needed. Then evaluation of misstatements identified during audit, that is how auditor will evaluate. 570 written representation. Written representation means what managements write and give it to the auditor. Like for example, if you want any confirmation something from management, you will ask. It's not confirmation for like some statement. If you want some statement from the management, you will ask them, write it in a piece of paper and give it to me. That is what we call written representation. SA 260, nothing like. Now I'll go on to audit report. Audit report, initially these things are like, I'm focusing on the SA chapters. So 1, 2, 3, 4, 5, I told nothing is there. 6 is there. 7 we looked. Then 8, audit report is some areas where your attention is needed, I'll say. Audit opinion. Basically, audit opinion is divided into 2. Modified, unmodified opinion. Audit opinion means we got a financial statement for auditing. We audit that and we'll say whether it is correct or not, right? That is what we call our opinion, audit opinion. Unmodified opinion means if everything is correct, we'll give the unmodified opinion. That is, everything is perfect, done and dusted. Okay. Modified opinion means, I'm saying in layman's language, not the complex terms. Modified opinion means if you find some error, fraud or something, you will give a modified opinion. And modified opinion is also divided into 3. This one, qualified opinion, adverse opinion and disclaimer of opinion. Okay. And when to give what? Unmodified opinion, I told you, if everything is perfect, give unmodified opinion. That is, everything in the financial statements is true and fair, whatever, all that thing. Then here initially it's the format areas, like what are included in modified opinion, all this, not entire audit report. I'll do one thing. I'll take where is that 8th chapter? Yeah. This is CARO. Let's leave CARO. Is it? One small table is there. Audit opinion, unmodified opinion, modified opinion. All these things are. This is given when financial statements are free from material misstatements. This is given when financial statements are not free from material misstatements. You obtain audit evidence whether financial statements are free from material misstatements or not. Then, this is the table. First of all, just understand this is the format. Auditor's entire opinion is divided into unmodified opinion when financial statements are free from material misstatements. Modified opinion, qualified, adverse, disclaimer of opinion. Qualified opinion. So, just understand this is modified opinion. So when you obtain sufficient appropriate audit evidence that the financial statements are materially misstated, this is what you normally need to do, right? So when will you give the qualified opinion? When whether sufficient appropriate audit evidence obtained or not. You obtained sufficient appropriate audit evidence that the financial statements are not free from material misstatements. You obtained that financial statements are wrong. You got audit evidence that financial statements are wrong. Plus the misstatements, these mistakes are material but not pervasive. It is important mistakes, not pervasive. Pervasive means it's not huge, it's not affecting too much. It is an important misstatement, but it is not very big. In that case, you give a qualified opinion. In this case, when you obtained sufficient appropriate audit evidence or you are unable to obtain sufficient appropriate audit evidence, in both the cases, but the misstatements are material and not pervasive, then you give qualified opinion. Just think simply, if the misstatement is material but not pervasive. Material means it's important, it's significant misstatement, but not pervasive. It is not affecting too much. It is not a very big mistake. In that case, give qualified opinion. Hope you got it. Other case, just keep this pic of this thing in your mind. That's enough. Then 1 second, I'll just remove these colors and all these stupid things. So it will be very easy for you to understand. Yeah. Then adverse opinion, when are you giving it? When you obtained sufficient appropriate audit evidence. Only when you obtained sufficient appropriate audit evidence and plus sufficient appropriate evidence you obtained plus the misstatements are material and pervasive. It is important misstatement and it is a very big misstatement also. It's a very big mistake, then you give adverse opinion. Then disclaimer of opinion, you are unable to obtain sufficient appropriate audit evidence, but the misstatements are material and pervasive. So in both these cases, misstatements are material and pervasive. Both these cases. The only difference between these two is that whether audit evidence is obtained plus misstatements is material and pervasive, give adverse. Audit evidence not obtained but misstatement is material and pervasive, give disclaimer. Audit evidence not obtained but based on the possible effects of the undetected misstatement. Some sentences there like that. I'm not saying it because you get complicated. I don't want to. Simple as that. Because tomorrow is exam, just use this. Possible effects of undetected misstatements may be material or pervasive. Auditor concludes like that. Then that is a sentence we need. But keep in your mind. Unable to obtain audit evidence, but from his judgment he thinks it is material and pervasive, then give this. But in any case where it is audit evidence obtained or not, but it is not material and pervasive, no, it's material not pervasive, give qualified opinion. Material not pervasive, give qualified opinion. Okay. Then management imposed limitation, all these things are not there. Then a key audit matter versus emphasis of matter paragraph. You know, what is the difference? Both looks the same, but tell me what is the difference between emphasis of matter paragraph and the key audit paragraph? I'm focusing on the core area. Tell me. It's very simple. Key audit matter are some very important, layman's language, some very important matter auditor identified during the audit, some super important matter which he need to, like some highlighted matter which he definitely need to say in his audit report for the user's better understanding. Okay. Emphasis of matter paragraph means something is already mentioned in the audit report, or finance statements, everything, something is mentioned. You have to give just an explanation about that. Something is already mentioned. You have to give an explanation about that for users better understanding. Just like a reference, you are emphasizing that matter. Matter is already there in the financial statements. You are just emphasizing that. That is what we call emphasis of matter paragraph. Just your layman's language. Keep it in your mind. So this is also only this much. Communicating key audit matter in the audit report is not significant. Then branch office account. Then wait. I'll give you one technique for CARO. If you have not studied CARO till now, if you have your own methods, you go with that. But just for your understanding, for your easiness, I'm giving you something. Where it is? Yeah. Look at this. This is what I call the CARO chart that I used to. This is what I used to study in inter final everywhere. I myself created this. I'm not explaining everything CARO because we don't have time. You do it yourself. But just to remember the CARO clause numbers, you have to remember the CARO clause numbers. Everything you have to write, right? So the order you need to remember. So for that, I'm giving this one small mnemonic. If you can remember this mnemonic, then you can easily get the order number of the clause. That is Pilag. Pilag, just consider it as a name. Please, please, please don't ask me what the hell it is. It is a name. Just consider it's a name. Pilag CDC. It's one person's name. Pilag CDC is a sure money fraud. And Nidhin NRC and Rema TQ are also frauds. Just keep it in mind. Pilag CDC is a sure money fraud. Nidhin NRC and Rema TQ also. Pilag CDC is a sure money fraud. Nidhin NRC and Rema TQ. Pilag CDC is a name. Nidhin NRC is a name. Rema TQ is also a name. Just keep it like that. Then Pilag CDC. P means proper records. Whether company is maintaining proper records, everything, physical verification, all these things. First clause, clause number 1, proper records. I means inventory. Lags means loans, advance guarantee and security, all these things. Then Pilag CDC, C, compliance with the section 185, 186. Then D means deposits. All these things are actually mentioned. S means S is the next clause. So when a question comes, imagine the question is related to loans and advance, like the schedule of repayment, something is mentioned in the question. So you can just remember, okay, it is related to loans and advances. Now you don't know what is the clause number of loans and advances. Just link Pilag CDC, P, I, lags. Lags means 3. So clause number 3. So that way you can easily remember something. Imagine something is related to internal audit, IN. Internal audit, like everything is there. You'll get this CARO chart, I think, in the Telegram group. My Telegram group, you just join, you'll get the chart if you want. This is for, like, I've taught my students how to use this chart, but now it will at least take you my 1 hour to do that. If you want, you take it. And if there's some question is related to internal audit and CARO, what is the clause number of internal audit? Think. You may not know, right? So you just use this. Pilag CDC, P, I, lags, C, D, C. So now it is like 6. SUR is like this, you count and reach IN. IN means internal audit. What is IN? You put that clause number, that's it. IN, internal audit, clause number 14. Simple as that. So this way you can quote it. Pilag CDC is a sure money fraud, Nidhin NRC and Rema TQ. P means proper records, I means inventory, LAGS means loans, advance guarantee, security, cost records, deposit, not cost, compliance with 185, 186, deposits, cost records, statutory dues, unrecorded income, repayment of deposits, repayment of loans, then all these things, till where I reached. Repayment of loan, money raised through IPO, FPO, then fraud, all these things are there. You go it, you will get it. If you want, you can take it. Okay. So by this, 8th chapter is also done. Then 9th chapter is like different entity and bank. Nothing conceptual is there. Nothing conceptual like something is not there. Just memorize and go, you will get it. That's it. Then what is the next chapter? The ethics also, you will understand like easily all this professional skepticism, all these things. So it's very simple. So now auditing, I just gave you some insight about the basic concepts, everything which you need, and hope you understood at least one thing, because my intent was to make it like a 1 hour video and give it to you and focus more on your self-study. Please do your self-study more, and please, I've already uploaded a 1.5 day strategy, but if you want, I'll just give it a brief on this. In your 1.5 days, just do one thing. Study the chapters in this order. This is what I would always prefer. Study the chapters in this order. The benefit of this order is that first study with the chapter number 1 to 11, 6 and 4. This you finish it, group it as one chunk, you will get around this minimum 25 to 35, 40 marks. This is also minimum, like 40 marks nearly you will get from this 35 near marks from MCQs plus descriptive together. Then go with the completion, review and audit report, another 15-20 marks, then different entity plus bank, then risk assessment, internal control plus AFS, financial statements. Because financial statement is a very easy chapter, but only because of the length, if you start it tonight, and as the first thing on 1.5 day, it may take you long. Sometimes it may consume like your entire night today and tomorrow morning sometime also. So you will get panic after that. So better, and risk assessment, internal control is a very easy chapter. If you are confident in this chapter, risk assessment, internal control, you put it here itself, 1, 2, 3, then plus ethics, something you do. But some students may not understand it properly, so I put it at the end, since it's a technical chapter. And because when you are studying in the 1.5 day, always keep in your mind that you have to have like a if you have a whiteboard, well and good, otherwise let's keep 2 papers something with you, 2, 3 A4 paper, And all those tough questions, when you're today we are studying your second chapter, one tough question is there. How to determine materiality. Third chapter, one question is there, determining materiality, professional judgment. So sometimes you may not be able to recall the steps, recall the points. So all those tough questions, just write the question, this determination of materiality page number on that one paper and keep it with you, or put some flag or something in the book yourself, like a sticky note or something. There's something. So, and in the one, like the day before, the day on the morning of examination, just go through, like you may have like 30-40 questions which you need to revise once more. So just revise that once more and you'll get it done. That is the easy way to do it. This is one thing that I suggest, because even if you revise something today, sometimes tomorrow or day after tomorrow you may not remember that. So that is why all the tough things, revise it on the day of the morning of the exam too, please. That is one thing. And if you are planning to leave any chapters, if you have not studied any chapters, if you have completely not studied one chapter, don't even touch it. 1.5 day, leave it. But when you are going through some chapters, some inside the chapter, there may be some topic you may be planning to leave, right? So that topics, just do one thing, just study 2 points from that. You don't have to study 3, 4, 5 points, just study 2 points from that, just 2 points. 2 points per answer. So anyways, you are planning to leave that, just study 2 points. What if that question comes and you can get 2 marks? It would be better, right? So 2-pointer technique used for all those tough questions which you are planning to leave. If you're planning to skip that question only, use the study 2 points and go. Okay, and one more thing that I can say to you is that when you're studying, if you have the habit of having your phone with you, I always say keep the phone away and study. But modern age, I know that students may be having phones. So if you are using it, then one technique that I can say, all the tough questions I told you, right? You have to write it to the question sheet. You just take the pick of that tough question plus answer. Take the pick in the phone. So 10 for 30 questions, something will be there. On the morning day, when you are traveling in the bus or something, just revise that questions from the phone itself, looking at the picture. So if the same question comes in examination, your brain will go to the pick in the phone. Your brain will easily go there. You will not be confused. Easily revising. That is one way you can use. So many techniques are there. I just told you this. That's it. So that's it. Bye bye. Go and have a very good revision. Hit it in the paper. Only I hardly took 1 hour max to max to just focus on the area. Yeah. Do the self-study. Kill it in the paper. That's it. You can easily do it, bro. Auditing is not that tough. And coverage is important. Quality is okay, important, but cover as much as possible. And you have to, whatever happens tonight, start faster. Because tonight you may think a lot of time is there, but tomorrow afternoon or tomorrow evening you will realize, oh my God, time is not there, I'm panicking. So study fast from tonight itself. Tonight itself, study fast. Or if you're feeling very tired, sleepy, anything, just sleep now and wake up like 4 or 5 hours after and start studying. Something which is better for you. I don't know your schedule, do it. So bye guys, and I will see you after the examination, and let me know your thoughts and opinions in the comments. That's it.